Treasury bonds are usually the best tool for downside protection and volatility reduction in a diversified investment portfolio alongside stocks. Here we'll look at the best Treasury bond ETFs. So why Treasury bonds? The federal government issues bonds to investors to pay for operating costs in running the country. Because they're guaranteed by the full faith and credit of the US government, Treasury bonds are considered to be the safest investment and are thus popular among retirees and risk-averse investors. More importantly, Treasury bonds offer the lowest correlation to stocks of any asset class, providing a superior diversification benefit compared to corporate bonds. As a result, Treasury bonds should typically be the first diversifier of choice alongside stocks. Treasury bond behavior differs among different maturity lengths along the yield curve. Ultra short-term Treasury bonds with a maturity of less than 1 year are called T-bills. They are considered to be a cash equivalent because of their nearly non-existent exposure to interest rate risk. This safety also comes with the lowest expected returns though. On the flip side are long bonds with maturities greater than 20 years. In between those are intermediate term bonds with maturities of 5 years, 7 years, 10 years, etc. Various funds offer baskets of bonds of specific maturities. Long-term bonds offer more risk with the potential for more reward, having the most exposure to interest rate risk. Longer-term bonds also tend to be less correlated to stocks than shorter-term bonds. As the names suggest, long-term bonds are more appropriate for investors with a long time horizon, and short-term bonds are more appropriate for retirees with a short time horizon. I'm of the mind that bond duration should roughly match the investing horizon, especially for those with an aggressive asset allocation that only allocates a small amount of the portfolio to bonds. Now let's look at the best Treasury bond ETFs, sorted by shortest to longest duration. First is SGOV or SGOV, the iShares 0 to 3 month Treasury bond ETF. SGOV is the most affordable ETF for T-bills, making it extremely popular with over $10 billion in assets. Out of this list, it is the closest you can get to a true cash equivalent. The fund seeks to track the ICE 0 to 3 month US Treasury Securities Index of T-bills with maturities between 1 month and 3 months. This ETF has a net expense ratio of 0.05%. I did a separate video specifically on SGOV here. Next up is CLTL, the Invesco Treasury Collateral ETF. Slightly longer than SGOV is CLTL, holding bonds with maturities of 1 year or less. Its average weighted maturity is about 4 months. The fund seeks to track the Barclays Capital US Short Treasury Bond Index and has an expense ratio of 0.08%. Next up is SCHO, the Schwab Short-Term US Treasury ETF. SCHO from Schwab is the most affordable fund for short-term US Treasury bonds between 1 year and 3 years. It has an expense ratio of only 0.03% and its effective duration is roughly 2 years. Other popular funds for similar exposure include VGSH from Vanguard and SHY from iShares, but SCHO is cheaper than those. Next we've got SCHR, another offering from Schwab, this time for intermediate treasuries with an effective duration of about 5 years. Like SCHO, SCHR is very affordable with an expense ratio of only 0.03%. This ETF seeks to track the Bloomberg US 3 to 10 year Treasury Bond Index. Still in the intermediate space but slightly longer than SCHR is IEF, the iShares 7 to 10 year Treasury Bond ETF, which seeks to track the ICE US Treasury 7 to 10 year bond index. The fund has a weighted average maturity of roughly 8.5 years and an expense ratio of 0.15%. Those seeking broader exposure or those who don't want to pick a bond maturity may simply want to buy the entire US Treasury market, which can be done with GOVT, the iShares US Treasury Bond ETF. The fund matches the weighted average maturity of the whole US Treasury bond market at about 8.5 years. GOVT tracks the ICE US Treasury Core Bond Index, holding bonds with maturities between 1 year and 30 years. This ETF has over $14 billion in assets and an expense ratio of 0.05%. Next on our list is TLH, the iShares 10 to 20 year Treasury Bond ETF. Investors seeking specific exposure to maturities between intermediate and long can use TLH. This fund is less popular than others on the list, with assets of only a little over $1 billion. The ETF seeks to track the ICE US Treasury 10 to 20 year bond index and has an expense ratio of 0.15%. Next is VGLT, the Vanguard Long-Term Treasury ETF. This is a popular, affordable way to access long-term Treasury bonds. Bonds in this fund have a weighted average maturity of about 23 years. The fund seeks to track the Bloomberg Barclays US Long Treasury Bond Index and has an expense ratio of 0.04%. Next is TLT, the iShares 20 plus year Treasury Bond ETF. TLT is slightly longer than VGLT with a weighted average maturity of 25 years. TLT can be considered more liquid than VGLT, but has a higher expense ratio of 0.15%. This fund seeks to track the ICE US Treasury 20-plus year bond index. Next, we've got EDV, the Vanguard Extended Duration Treasury ETF. STRIPs are long-dated Treasury bonds with the coupon payment stripped or removed. The fund seeks to track the Bloomberg Barclays US Treasury STRIPs 20 to 30 year equal par bond index and has a weighted average maturity of a little over 25 years. EDV has an expense ratio of 0.06%. You may still be wondering why we'd solely prefer Treasury bonds over corporate bonds. If so, be sure to check out my video here that explains the reasoning behind that. All these Treasury bond ETFs should be available at any major broker. Do you own any, or are you thinking about buying any? Let me know in the comments. I am long SGOV and EDV in my own portfolio.